This is the only product that offers revenue guarantee.
Well, hi, everybody. Welcome back to the CommStock channel. I'm Marlin Bohling with you, and we love talking with you about ag-related issues. Today is no different. Today, I want to welcome aboard Eric Relf of CommStock Investments, and we want to talk with you about something that's very important this time of year, and that is the matter in how you protect yourself with your crop production on your farm. And Eric is a specialist in that. He's not only a well-qualified broker and market analyst, but he deals with all types of insurance on the farm and ranch. And I thank you for joining us here, Eric. It's good to have you with us. And let's talk about this. We have a deadline coming up, don't we, when it comes to choosing your parameters for your crop insurance protection this year?
Yeah, March 15th. I mean, you've got to have all your nuts and bolts put together by March 15th. And it's really kind of odd that they do it this way, but we set the spring price throughout the month of February. So we're in the process of setting that right now. And then once that price is set, the last close of February, then we have the average for the month. And then we have 2 weeks to get everybody signed up. So nothing like giving us ample time there. So it's all hands on deck for a couple of weeks until we get to that March 15th deadline, and then kind of smoother sailing from there, depending on how the planting season goes. But yeah, definitely the time of year where we're scrambling, and it's long hours and a lot of phone time and a lot of going out and visiting with people to get signatures and things. And so this is becoming one of the most hectic times of year for us.
You know, guys and gals out there in the country have a lot more options to choose from than what I was used to, like back in the 80s and 90s. I
Yeah.
mean, it's a very complex game now, and maybe you can walk us through how some of this works. Has anything changed specifically for this year or not?
There has been one major change, and I think with market prices where they're at, we definitely have to consider this. I'm going to pull up a couple of different quotes, and one of them is from Fillmore County, Nebraska. The other one is from Clay County, Iowa, where I'm sitting right now. So these are locations where we do have clients, and I'm looking at the Fillmore County, Nebraska right now, and want to bring up a few things. So one of the big things and the major change that's occurred this year is that the government subsidy for ECO, or enhanced coverage option, has increased from 44% to 65%. Now, that ECO is a top tier coverage that covers from 86 up to either 90 or 95% of the higher of the either spring or fall price. No different as far as the price setting than what we would always have with our YP and RP coverages. So right now we're setting the spring price in the month of February, as I mentioned, and then the average close through the month of October will dictate that fall price. The higher of the two is what you'll be guaranteed against. Now, what I wanted to illustrate here is the different levels of underlying coverage with the add-ons. Now, this little graph here is representative of revenue protection coverage in the dark blue, ECO in these top orange boxes that are the same all the way across, and then SCO filling in the gap between the RP coverage and the start of the ECO. And I guess one of the big things with the lower market values than what we've seen in recent years, and still having elevated input costs, this is one of those years where we definitely want to consider that top tier coverage. And then the government says, oh yeah, and we're going to increase our subsidy by 21%. So it almost makes it a no-brainer for many folks. Obviously, this is conversations that you need to have with your agent. We'd be glad to offer a third-party opinion on some of this stuff. And if you want to have discussions in that regard, we can definitely do that. But I wanted to illustrate these gray shaded boxes. If you're taking a 70% RP and just adding ECO, you've got a huge gap in coverage here. And you can see as you increase your RP coverage across the board, that gap narrows. Now you can fill that gap with SCO, illustrated by this first orange box in each one of these graphs, and that will help bridge that gap as well. The only way to be covered all the way up to 95 is to buy your up to 85% underlying coverage, and then add SCO, which you can see here on the far right, just covers this 1% sliver from 85 to 86, and then the ECO covers from 86 on up. Now, in this example, we're covering that 85 to 86% range for just $10. And that's, it's adding $10 of coverage, and we're doing that for just over $1. So nearly a 10-to-1 ratio there. And so what we're advising for a lot of folks, as, again, given the market environment, is do whatever underlying coverage you would normally do, and let's do these add-ons, because the cost to return probabilities or potentials is definitely worth considering, given that we still have such elevated prices on the input side of things. We've got to protect the other side.
How does that subsidy compared to what you normally have gotten over the years?
So depending on the inceptions of the product and so forth, this exceeds the original subsidy for ECO by over 25%, and is 21% higher than anything we've ever seen. So this makes it quite a bit more affordable to really amp up that coverage to that 95% level. Right now, our corn spring price is sitting at well, prior to today of this recording, it was at 468. We should be around 470, and with a week to go here. And so by the time we get done setting the price, we should have a spring price that's north of 470 to be able to cover 95% of that coverage, or of that price, with some of these coverages. Should at least guarantee a break even for the operation in most producers' cases. And so that's foundationally, we just feel like that's something a person's got to consider, and at least dig into the numbers and see if it's going to work for you.
Well, the way government programs are being cut, I would imagine that maybe this is something that people should take a hard look at before it disappears. I don't know.
Definitely so. And a couple of things that definitely need mentioned here is the SCO and ECO are county-based coverages. They are not farm level coverages. So that can be advantageous or disadvantage, depending on your given situation. But everything up, your underlying coverage is going to be at the farm level. So if you take 85 RP, you're going to be guaranteed 85% on the farm level. Everything above that, from the 86 on up to the 95, is going to be on a county level. If you have some of the better ground in the county, that would be a benefit to you. If you're somewhere in the middle, it should be kind of a wash. If you're on more bottom end ground, and maybe you're broke up and you have some that's real nice and some that's not so much. Here in Clay County, there's some soil that's really sandy and light, that's not going to be too much of a benefit, versus some of the heavier black ground right here near Royal, where I'm sitting, where they could really be, it could be a big advantage for those folks.
So anybody out there watching this particular podcast right now, what do they need to gather up? What do they need to have in order to get everything set up for their insurance this year? What kind of things do they need?
One of the things is, and I wrote a report about this that went out a week ago on Friday, and I did receive several calls, and one of them was getting clarity on ARC versus PLC. That's a big deal. You have to sign up for that every year at the FSA office. If you are going to, or think you are going to, utilize these add-ons, especially, well, only regarding the SCO, so that anywhere from 70 to 80, 86% coverage on a county level. If you're going to utilize that at all, you have to take PLC, because you can't take county ARC and SCO simultaneously. So that's one of the big things that people need to be thinking about right now is, okay, if I'm even considering this in a serious way, then I definitely need to sign up for PLC instead of county ARC. The likelihood of ARC or PLC getting triggered is minute anyway. It would be catastrophic if either one did, but there's not too much of a spread anyway. So we're advising, okay, go ahead and sign up for the PLC at the FSA office. So that's one thing that's got to be done right now. And then make sure your AD 1026 form is up to date while you're at the FSA office, because those subsidies can't be received otherwise. But most people have that all in order, unless you're dealing with a new entity or something along those lines. And additionally, talk to your agent about your break evens, and let's see if we can make something work with these revenue levels that are available now.
Well, and of course, doing what you do, I mean, your whole office is centered around risk management, whether it's price protection in the markets or futures or options or what have you. That all kind of dovetails together to form one overall strategy for kind of a game plan, right?
That's right. And crop insurance on the grain side of things, our base NPCI coverage, and whether or not we choose these add-ons on a given year, is the foundation of everything we do moving forward. We have consulting clients where we will do all of their strategic planning with them. We don't do it for them, but we work with them to do their entire marketing year strategic plan ahead of time. And obviously that's being done right now because crop insurance is the foundation of the rest of it. This is the only product that offers revenue guarantee. Nothing else is guaranteed. And so we have to build from this because this is our backstop in many cases.
Well, and of course, our Family Farm Masterclass is going on this weekend in Des Moines. And I assume you're going to be talking more about this on Saturday, right?
Yeah, tomorrow we have a marketing panel. I'll be going over, specifically myself, I'll be going over the cattle market, livestock risk protection insurance, as well as the crop insurance and some of these changes that are happening right now. And it's useful information in real time, kind of a timely opportunity to gather and talk about these things.
You mentioned the livestock risk protection. I've heard you talking about that a lot here over the past year or so, and it seems like that coverage really is gaining momentum in usage, isn't it?
It is, and the disadvantage we have is that there are a lot of people selling it who maybe aren't overly well versed in the details of the different categories of LRP that are available and how the prices are derived. The unfortunate thing about it, when there is a high demand for something, is maybe people scratch the surface and are able to be certified to do it without having a full grasp of it. And I think that's a disadvantage in many industries. I used to say that if they make the test too easy, then anybody could do it. And that's never a good thing either. And so I've had a lot of conversations with folks all over the country who've run into trouble because they didn't realize this or that. And our biggest thing, we're certainly not going to be talking to a high percentage of people, outsiders who are going to bring business to us. That's not our point, but we want our clients and our followers to understand how these products work, how they can be used, and what kind of benefit they can provide for your overall risk management.
Well, and on a personal level, I can tell you, I've never seen anybody with as much expertise as the guy I'm talking to right now, Eric Relph here at CommStock. When it comes to LRP, I mean, he knows that inside and out, and he'll discuss angles that I never even dreamed of before. So he is a fascinating guy to talk to. I encourage you to check it out. Eric, thanks again. I appreciate you joining us, and look forward to talking with you more at the masterclass in Des Moines. And best of luck to you this weekend.
All right. Thanks, Marlin.
That's Eric Relph of CommStock with us. And again, we'll see you at the masterclass. And give Eric a call if you got any questions about these insurance coverages as we move into the growing season. That'll do it for this episode. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time on the CommStock channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.